Hey guys, welcome to the newsletter. This is Bruce Marshall. Today we are looking at three stocks to consider right now. As you can see here, I've got the ES chart up, and we do continue to go higher, higher, higher. Where is the ceiling? Nobody knows. Today we're down a little bit. I mean, compared to where we've been, maybe we come back to the 20 or so. I don't know, but this thing has been very, very strong. All the moving averages are still pointing up. We have every reason to continue to be bullish. However, we have to be more and more and more selective as we go higher, 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 higher. That's why I've got three picks for you today. And the first one actually plays off of this and off of the Nasdaq as well here. Look at the Nasdaq. I mean, that's about as straight up of a market as I can ever remember seeing, and I've been doing this for a long, long time. Um, we know it'll stop at some point. It'll come back down. I mean, at least here, the 34 will be in here somewhere. The 50's down here. How far does it come back? I don't know. But again, we have to be very selective. But one way that we can play off of this is the NASDAQ, right? So trading volume is increasing. Let's look at buying the NASDAQ. NDAQ, that's our first stock, NASDAQ, right here. As you can see, now the stock is, we'll talk about this in a second, but NASDAQ reports higher May options volume. Trading obviously is picking up, and we've got Micron and AMD and Nvidia and Marvell. All those stocks are just going bonkers, right? ASMR, etc. So we're going to see continue more and more and more volume. They make fees off the volume and float and all that kind of stuff. Anyway, stock has pulled back here, so I would say this is a little more aggressive of a type setup, but let's look here. We're coming back. We're just below the 34, so maybe we come down into the 50. Maybe well, actually, there's the 50. But so be careful on the entry here. This does not rule this out at all. I think there might be a bounce here, but the reason that I like this, of course, again, I think with this momentum we're having, it's kind of a lagging effect. We won't see that in the earnings for until next quarter, and we're likely to see a nice pop there. But that's the main reason. The 3-year sales growth for the Nasdaq is about 10.5%. 3 years earnings growth is about 15%. Which is, that's pretty good. It's not stellar like a tech stock, but our profit margin is about almost 22%. It's 21.6%, so that's pretty crazy. RSI of about 67, that's good. And NASDAQ does actually have a dividend coming up. I didn't even know they paid a dividend until I looked. Next week on the 12th. And it is 1.43% or 31 cents a share. That's interesting. It's not a huge dividend, and but if we're going to buy a stock and maybe do a covered ride or whatever we're going to do, and it has a dividend, that is a little bit of an extra kicker for us. So put that on the list. The second one, I kind of want to go back to more consumer staples, kind of things, just in case the market does kind of start taking a breather as we get into the summertime, right? So the next one is Coca-Cola. Look at this. So Coca-Cola, we all know Coca-Cola, right? It's come back down to the 50. It's in a really good spot right there, consumer staple. This one would be a good idea for a covered ride or maybe a collar or something like that, or the wheel idea, my wagon wheel book that I wrote. Pretty solid chart. It gets even more interesting if you go out here. I mean, look at that. This goes back to 2001. So, I mean, isn't that just a beautiful pattern for, let's see, 27. I mean, look at that. For 20 years, it's done nothing but go up and pay a dividend along the way. So, pretty interesting name there. 3-year sales growth is only about 4.5%, but you can see what it does over time, right? 3 years earnings growth about 11.8, profit margin 27.1. That's pretty amazing to me. And RSI is about 40. Let's see what we've got over here on the dividend front. 2.69%. That's right in the kind of the area I like, about 2.3, 2.6. Pretty nice, 53 cents a share. Now this goes on dividend again As with the Nasdaq, it goes on 6/15, so you could buy that now, the stock, and catch that dividend if you want to do that. That might be a good longer term play, for an IRA or something like that. The last one, let's get back into tech names, and this one has been pretty interesting. Applied Optoelectronics, right? Good look, hard hard name to say. Good looking chart. Really picked up a momentum lately. Came back down to 50 right there. We're back to the 20 right here. Now it's a $185 stock, kind of roughly. So it looks pretty good. Again, they make optical, electrical, or electronic components such as networking, lasers, components, equipment for internet. Um, I'm trying to remember all the things that I read about this company, modules and equipment for broadband, fiber access, networks, all that kind of stuff. So it's a good sector, and that will be a good sector going forward. 1-year sales growth about 82%. This is kind of a newer, I would say. You can see the charts kind of flat, and then it really starts taking off. I think we'll see more of this in the future. 1-year sales growth 82%, 1-year earnings growth 454%. RSI is about 53. It does have short interest of about 7.5%. That's good in my opinion. So again, that would probably also be in a little bit more aggressive play, but I'm trying to find names for us that aren't mainstream things, and ways we can still participate in this market without just buying Micron, for example. So with that, let me wind it up here. Let me know if you have any questions. I think these 3 names will be good to look at. We'll take a look at them if you're in the Options Income Mastery room. We're actually looking at potentially doing some trades in a couple of these names. So anyway, check those out. Let me know what you think. Thanks for your time. I appreciate it, and I'll see you at the next update. Take care.